Hello and welcome to Big Deal. Now, equity markets are surging, largely buoyed by the domestic institutional investors, revved up by the large influx of investments in mutual funds. Now, on the other hand, the homegrown VC investors struggle to raise domestic funds to fuel the growth of our own entrepreneurs. So the big question today on Big Deal is how can we achieve Atmanirbharta in fueling India's growth story? And to discuss this, I'm joined by three gentlemen who are expert on this particular topic. Let me welcome on the show TVS Capital Funds Gopal Srinivasan, Gaja Capital's Gopal Jain, and Anicut's Ashvin Chadha. Gentlemen, so good to have you on CNBC-TV18. Now, Gopal Srinivasan, to begin with, why this discrepancy while it is very clear that there is no dearth of savings or investment sentiment in the country?
Hi, Nisha. Great to be on the show as always. India has got roughly about 4 trillion rupees worth of commitments made from rupee capital to private equity and venture capital funds. We know this thanks to the wonderful new data from SEBI, which came out last month. Just think about comparing this with 110 trillion rupees that is coming from mutual funds, that is domestic institutions, and from retail into public markets. That gives you a very, very, very clear idea. When you compare the amount of private equity investments made each year, most of the time they're more than the total fresh IPOs raised, which is a comparison benchmark to ask the question, why this 15 to 1 difference between public market investments and private equity, when we know, again, thanks to SEBI, that the top quartile funds are all returning north of 20% IRR. That, I think, is a puzzle which we have all been working on to solve so that we can get more Indian money to VCPE. And most importantly, we need 100 more VCPE funds to reach the $10 trillion GDP goal, which by itself needs about 40 trillion rupees worth of capital from private equity and venture. I know I'm throwing a lot of numbers here. All I'm saying is we need more funds, we need more fund managers because we need more enterprises to come from more entrepreneurs. And therefore, rupee capital is the only one that is close to the issue, who a rupee capital institutional manager can assess a Gopal Jain or a Gopal Srinivasan or Ashvin Chadha when we are first-time managers and say, you know what, I think you guys will do a great job. We will give you money. But when that is scarce, the institutional domestic capital, then we are not going to find these managers. Can really New York bus drivers pension fund judge who the next new manager in India should be? Or can it be done better by a SBI or a SIDBI or any other institution in India? That is the question.
So, Gopal, you've made your point very emphatically, backed by data as well. But one thing that stands out to me as an Indian is also that are we exporting a large part of growth that PEVC money has made out of our own Indian entrepreneurs' growth story and their ability to create value? Gopal Jain, you would like to take that question?
Absolutely. So that's currently happening. If you see our private sector, a very vast swath of the unlisted private sector is owned by foreign capital. Very similar to the situation, Nisha, in public markets, let's say 10, 15 years ago. Today, domestic institutional investors have emerged as larger investors, and we have Indianized the holding pattern of listed companies. If we don't take corrective measures, if we don't do these stroke of pen reforms, and if we don't connect the Indian venture capital private equity sector to the Indian savings, then, today, just as most of our unicorns are owned by foreign investors, even few from 4 trillion to 10 trillion, our unlisted private sector will be owned by foreign capital. There is nothing wrong with some of it being owned by foreign capital. The question is disproportionately owned by foreign capital.
That's right. In the middle, Gopal, we had seen also that the Indian entrepreneurs or the Indian large business houses or corporates had stopped their capex cycle and even M&A. And a large part of our companies and a bulk of that really went to the foreign private equity as well. So the ownership is definitely there, and it's the data is right there for us to see. Ashwin, also introducing you to this particular discussion. What are your views, and how does a breakthrough really happen in this? Because, the mutual fund investment culture really came in after demonetization to a large extent. And of course, the kind of potential the Indian equity markets showed. According to you, what can be a breakout moment to achieve this in the private space?
Yeah, Nisha, I think thanks for having us. I'm seeing more and more participation from retail in private markets. We have to get more larger ticket sizes from institutions also. There have been, SIDBI has been at the forefront. They've anchored our first fund and have been supporting a lot of new fund managers. Like that, we need many, many more organizations. I think, as Gopal mentioned, if you see the returns, this has been a very lucrative investment avenue for the first few set of investors. I have no doubt in the next 5 or 10 years, we will have significant amount of rupee capital backing unlisted companies through funds. Unfortunately, have we lost in the next 5 or 10 years? Will we lose many, many more potential unicorns to foreign capital? I think that's the question we all need to answer. Typically, the first set of institutions make the most money. So if we can do this now, as opposed to 5 or 10 years from now, I think we will see a lot of that money recirculate into back into Indian companies.
Yes, and Ashwin, also with the kind of momentum that the Indian economy is seeing, and with the elections behind us, everybody is expecting, or at least exuding, the confidence that the next 5 to 10 years is going to be a secular growth run for India, and Indians themselves can really capitalize on it in the true sense. Now, Gopal, Srinivasan, I want to ask you, you recently raised funds, you had gone through the whole exercise. How has been your experience, and what percentage of your fundraise really came from domestic, and what percentage from foreign capital?
Nisha, we were very lucky. In 7 months of SEBI approval, we've been able to raise about 2,300 crores of pure rupee money. We have never taken a dollar in any of our funds by choice, because we're a mission mode company for India. What I really want to use that is to focus on a simple idea that Gopal, Jain, Ashvin, Chadha, myself, we were all first-time fund managers. We did not come out of any other fund management platform. We always basically sort of learned to raise a fund by our own. We have got about 60 new micro VCs since COVID, but we need 200 more people. And I think if only the established, and I would use a word that my teenage children used to use, entitled managers, can raise money easily, because we have a track record. This is my 4th fund. I can give some numbers. I can show a team. I know my LPs. For example, in the 2,400 crores we raised for our first close alone, I think 87% is from existing investors. So what are the new managers? India needs those managers, because unlike in public markets, I'm not saying entirely unlike public markets, but much more than public markets, it's the skill of the Ashwin Chadha, who comes from a family in Delhi, to go establish an office in Chennai and Bangalore, find these new companies, or a Gopal Jain coming out and doing this. We need 100 of them. And if we don't have domestic capital, we don't get those fund managers. Actually, that's what worries me more. Maybe I'm one of the older people in the industry by age and may not be by experience a lot. But how do we do that? I think that is the question. I feel like a minister in the 60s government worried about small-scale industry, because it is from the small-scale industry that the giant industrialists came. That was a nursery of entrepreneurs. Where is this nursery of fund managers? We say, boss, मैं आपको 10 रुपया दूंगा, आप 50 रुपया invest कीजिए in selected industries. We are actually, our development fund institutions are amazing. I'm a great fan of SIDBI, but because of their own policy, they're able to put all kinds of restrictions to promote a certain development angle, which I think is great. But when we have 250 trillion rupees of non-public equity savings in the country from banks and insurance companies and 30 trillion of pension money and so on, we have no shortage of capital, as my friend Gopal Jain loves to say. Yet, when we drive on that brand new highway from wherever, Ahmedabad to Baroda or Bombay, the person who takes as part of the toll which we pay is a pension fund giving pension in Florida and California, not the pension fund giving the returns to India. And India has very serious yield issues. A little bit of money of pension in private equity, even if it's 5 or 10%, it can give double the yield that they are getting today. So
right.
that 5-10% can give them nearly 0.6 to 0.8% overall yield return, or 10% in relative terms more return. So I feel that we need it for yield basis, but most importantly, we need these 100, 200 Ashvin Chaddas to come out more.
Right. So very valid points made there, Gopal. But I would say two things, that the investment culture has begun in the country with mutual funds we have seen, and now people are looking for more diversification. And so the people are also looking for more avenues to put their capital to work. And on the other hand, in the last few years, I have seen a lot of influx of many managers, many family offices have really come in, and many erstwhile managers in public, in foreign funds, have set up their own shop, given the advantage of their experience there. So that is increasing, but maybe not at the pace at which we would like. On this note, we will slip into a short breather, but we'll come back and discuss more about the measures to be taken and what kind of a support that the government can give on Atmanirbharta in domestic fundraising. Stay tuned to Big Deal. Welcome back. You're watching Big Deal, and we are discussing how to increase the domestic fundraising for the homegrown private equity as well as venture capital community. Gopal Jain, we were discussing how it is very critical, very important. Government has come up with fund of funds. SIDBI is there, but we need more. What more can be done to change the trajectory and also to infuse more domestic capital in this space?
Absolutely. Nisha, you know, as an IIT, and I've had a front row view of how over the last 60 years we've exported our best brains abroad. Similarly, currently we are exporting the ownership of our private sector abroad. And we need to undo it. We need to make Indian private equity Indian. And the way to do that is to link it to domestic savings. We are the world's second largest savings factory. And this can be done in a very simple fashion. You can kill two birds with one stone or one arrow, whatever you say, which is to operationalize a proposal in 2022 budget, which was about creating more SIDBI fund of funds, more SRI fund of funds, with the government anchoring a set of fund of funds. This was a proposal in 2022. The time has come to operationalize that proposal. With the same 10,000 crores, what this means is that you'll have 50,000 crores fund of funds. Fund of funds is an asset class that retail investors can invest directly in. So what it does is it creates institutional investors like fund of funds who, as Gopal Srinivasan mentioned, can back domestic managers, also first-time managers, and it allows domestic retail investors to invest in fund of funds where the chances of losing capital are so much lower than investing directly in private companies or investing in funds.
Market regulator every time for any asset class is very critical about safeguarding the interest of the retail investors. Ashwin, you want to jump in on the kind of risk factors and why it's not opening up too much? Is it still considered a risky asset class where more sophisticated investors would do better?
Yeah, Nisha, I think just by going back into history, I think it's taken a long time for domestic Indian retail to enter the mutual fund market, right? If you're seeing the SIPs every month, record numbers are coming. It's taken years for this to happen. I have no doubt the same will happen in the private markets. It takes, our fund lives are anything between 5 to 7 to 10 years even. So for us to establish our track record and convince retail investors, I think that would take some time. So typically institutions come in with larger checks, they anchor funds and seed the fund managers. And the next step is then retail and HNIs come in. Here it's actually been quite the opposite, where a lot of family offices and retail have started to invest in private funds. And we're waiting for some of the larger institutions to actually come in a big way.
Right. So that's one way of looking at it. Gopal, Srinivasan, how would you mitigate the risk factors and also the government's perception that the pension money should go in extremely safe asset classes?
The D word, Nisha, diversification. Basically, the way we make sure that all this 250 trillion of savings, whatever extent, 20 trillion to 10 trillion, goes safely is to create a channel or like a fund of funds like SIDBI has done, where you basically use these channels of fund of funds. They can be government influenced. They could be the pension managers already mandated by EPFO or NPS to manage. Make them get the right set of professionals who can make sure that diversification, diligence is done with a depth of professionalism that is needed. It is not a rocket science. Indian origin individuals are running fund of funds for the rest of the world. They would be delighted, the fourth D word, to actually come back to the fifth D word, the Desh, to actually perform this role very, very happily. There is no rocket science. You are an outstanding TV anchor, but outstanding TV anchors were not there in 30 years ago in India, but they came. Here we are all over the place managing fund of funds. So we need this fund of funds channel. We need a fund of funds channel for retail investors. I understand from Gopal Jain, some 10 lakh mutual fund, a special, more risky mutual fund category is coming. We could create categories where mutual fund managers can run large fund of funds from retail money for VCPE. HDFC has already started something. So there is a very, very clear way to do it, and that is with diversification, with diligence, with the depth of professionalism, with talent that is available. No, there is no magic to it.
All right. So the path has already been set, but a lot more needs to be done. Gopal Jain, the government is in line with the thought process, but as part of IVCA, the industry body, investors have been making representations to the government. Any key wish list from the budget? It's just around the corner. Are we expecting anything, or what can the government do?
First is to start with measures that have been already announced. And I've talked about one of those, which is the 2022 budget proposal around fund of funds. The second is, again, in 2022 budget, we had the Damodaran committee. I said those are two instances of kind of low-hanging fruit, which are just awaiting implementation as opposed to fresh proposals.
Yes.
Right? And then, as Gopal, Srinivasan and Ashvin have mentioned, this is the time. We are not inventing the wheel here. Pension funds globally have had a very successful experience of investing in this asset class. Insurance and banks have had a certain experience. And through diversification, in the case of fund of funds, setting up thresholds, you can manage risk very effectively. We've also recommended to the government a couple of other things, which is like, extend real estate type long-term capital gain benefits to reinvestment from AIFs. So if you have capital gains in AIFs, you can save those capital gains by reinvesting in AIFs. And similarly, a proposal of extending IFSCA to Mumbai. The time has come for that. That, if you want to grow IFSCA further, let's say 10x, you should extend IFSCA to Mumbai.
IFSCA to Mumbai, that's a very big ask there. And I would wait to see how the government is really taking it. But a lot of effort is going into the development of Gift City as a commercial hub by the government recently. Now, Ashwin, any more suggestions? And how do you see this really panning out with government's effort and also the euphoria around investment? Because I would say when we talk about career plays, the private equity and VC players have substantially been successful compared to the other career classes, in my view.
Yeah, Nisha, I think, we mentioned it earlier. I think clarity around taxation would be very helpful around AIFs. I think, we've all had experiences with portfolio companies having, again, angel tax issues. So simple measures which have been spoken numerous times before, I think clarity around those would be very helpful. We're hopeful that some of this will come in the current budget. I think, GIFT City is a very welcome move. I think, our peers are domiciled outside. I think we will see more and more Indian fund managers work out of GIFT City. I think, that can be a really big move for us. Having said that, I think, the tailwinds are there. I'm only hoping that, like some of the larger family office, like some of the retail investors in India, larger institutions will come and support us and will actually honestly take most of the gains. The gains today are going to endowments outside of India. And if those can be had by Indian institutions, and then reinvested in India to promote further startups, I think that would be a very welcome change.
Right, great points there, Ashwin. Final comments, Gopal, Srinivasan, any final comments on how soon do you see this really materializing? And we have discussed a whole host of efforts that can be taken. But I would also like to point out that the Indian regulators have been very slow and very cautious in opening the kind of caps that other institutions like banks, insurance, pension funds can have on different asset classes. So how do you see that really changing?
Nisha, first I want to say that actually Indian regulators have moved pretty fast. The way SEBI is moving is really at quite a lightning speed. A lot of the action actually has to now happen outside SEBI. So I would think of 3 steps. One, make sure that this fund of funds channel for pension money is set up as fast as possible. I think it's maybe 2-3 years away maximum, because NPS already has enabling provisions. 2, as you have been put in your own tweet, you were standing with Chris Wood. Chris Wood himself has correctly said that if you were to normalize LTCG rates for public markets with other markets, private markets, it will only be a short term before the market accepts it. So make sure LTCG penalty is not there on private markets. That would be step number 2 in my mind. And the third step in my mind is fundamentally to ensure that, if you want the entire foreign funds who are investing in India, to signal to them very, very strongly that we welcome them in India, but we also expect them to manage Indian money. One such signal with a very, very powerful FM like we have with Madam Nirmala Sitharaman or our Prime Minister saying, please come participate in India, but leave something behind. Kuch to chodo table pay. I think that message will mean that just like Sequoia has now become Indian in India, Matrix is on its way to becoming Indian in India, most of the foreign funds will also create an Indian side pocket, which will further spur our goal. India will become, like IT services, the global hub for investment management. That is my firm conviction, my dream and my desire.
Gopal, you've given a great vision, and thank you for, following my tweets. And of course, Chris Wood also shared with me that he's just amazed at how the domestic institutional investors have really caused the entire surge in the equity markets. And he was saying that once the market falls, the FIIs will get a chance to come in probably. So this is a good situation to be in, but great points made on Atmanirbharta, which is also in line with the government's agenda. And probably a lot of efforts will be taken in this direction to back our own entrepreneurs as well, instead of backing only on foreign capital. Thank you so much, Gopal Srinivasan, Gopal Jain, as well as Ashvin Chadha, for joining us on this very, very interesting discussion. And thanks to all our viewers for tuning in.